Welcome to TradeTheMBI.com. This is John. This report is for the 29th and final trading day of the year. And, well, futures are indicating that there's a push towards that 27. I think there may be some people that want to finish out the year with that nice bellwether. It might be a little extreme, but we'll see. The daily is certainly in support of it so far, with the little spider developing here with the midterm buyers moving back above. We've had long-term buyers in the red well above cyan the whole trek through this, and a continuation of the shakeout. So without a fade there, you're unlikely to see much difficulty. We saw this as the short-term buyers in the steel kept increasing. So there was always this little buoyancy that was built into where we were at. It's going to push us right back towards the peak, which was 98. So that was where it topped out. It'd be interesting. And this was part of that trade where you get a little bit of rebalancing, but at the end of the day, I was talking to you also about the fact that there's people behind on their returns, and in some cases they've got to push, and particularly a low liquidity situation, it might be enough for them to make their numbers look a little bit better. NASDAQ's still well behind. I think some of that's just a result of the Apple and being such a predominant force there, and suffering under some of the weak sales for their iPhone X, the next ultimate version. It's like, how many of those can you release in 1 year and think that you're going to, blow out numbers is interesting, but needless to say, that's what they're doing, okay. And it's just been a soft retread. Now, it's going to be a complete reset on the shakeout here from a, stabilization standpoint. So with the steel under, you've also got midterm buyers, the potential for pop at the start of the year, still there. And then you get this huge buoyancy here from the massive move in the euro, which extremely overbought. Doesn't have really a justification, but you can still see cyan below red. That is still a long trade there. So they're just pumping that euro that still going to buoy the S&P, and you can see why it would be up where it is, given that. And crazy elevation in the bond trade. Not too big a shock that we had to reset from an oversold, but is it likely to sustain itself? No, but as we've always talked about, and this is where ABM becomes an interesting one to follow, because like I've said, below the green, you're short, but when you move back above it, that's the point where you got to flip and turn around. And then I also incorporate the Fibonacci, the Fib level retrace program, because it really captures the ability to see when those fall into 50% categories and then turn above them, and you can play those levels quite effectively. And like we talked about oil, you saw pretty decent drawdowns, which is sort of irrelevant. It's the production ramp up that's going to be the interesting issue, given that we're seeing significant factory growth, and that indicates manufacturing is on a strong move, and that is definitely propelling gold. And like we talked about with gold, is sort of that inverse trade to the Bitcoin relationship. We had a little bit of fade off of the gap up, that it came back, which is very interesting because you get almost the identical move from the Bitcoin. We had the nice buy setups that came down here at the low, moved back up to the high, and then we started getting the pops above the 13.5. The thing is, you still had rising shakeout. And it wasn't until, and it's an interesting one to look at too, because you can see the relationship a lot of times between the yellow shakeout line here as it relates to the short setup. When the DOC spreads typically happen and you're achieving a move that gets you, when you've been well above the plus 15, as it gets back to that plus 15, that's when the shorts tend to be more effective. So certainly the final one right here where you broke below, and you see the little orange reading right there, that's an indication that the yellow line has dipped below that key level. At that particular point, though, you had cyan below red. It wasn't until then, a couple bars later, that it moved right there, and so that was at like 14,820. And then you can see that the expectation would be to go back to the 50% line, which it in fact did. And at that particular point, you can see shakeout, even after the little buy pop signal that came in there, started to fade immediately, and broke below that 50% portion right there, which is an indication of gold being more buoyant and right back to its peaks, and in fact potential that it will open even a little bit higher as that Bitcoin fades. So here you see the 5K early morning action there. We've been in this nice, steady, consolidation move. Nothing horrible about it. And then we started to see at the end of the day yesterday the pops below with the cyan below red, and then it started to take off again once the shakeout got positive. And sure enough, right above that 50% line on the reset, and this is where your ABM reset from a buy signal back over here. Fine, you could stay with that, but even then, even if you got above the 50 and wanted to get out, and then just follow the 50 as the new re-entry point, boom! Look at that, it just exploded from there. So extremely overbought, which means it's likely to retrace. Will it happen before we get all the way up there? We may see a little backfilling here before the market even opens, but I think there's going to be a pretty strong push towards that end of year situation, because I still think there are plenty of people that are trying to catch up to the return, and that usually it's easier in the pre-market to make this kind of nice move to help, and they may just get their window dressing from that push, maybe enough to give some of them the numbers they need. We'll have to see if it carries through going into the rest of the day, but what a powerful year. We were on top of it from day one, and we are pretty much right in line with what we expected for the entire year. It was pretty, some people will call it normal, but in fact, we could see this happening from the previous year in November from the election, when I was saying to buy those futures, and that seems oh so long ago, on that dip of, nearly 100 points on the S&P on election night, saying buy, 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 and it's been a home run since. So all good. As always, though, renewals will be coming out for the new year, and should have a few of the changes on a couple of the programs ready to come out, so you'll be able to see those at that time. But all very exciting stuff. As always, though, I wish everyone a Happy New Year, and we will continue to do the same next year. We expect that we're going to get some more volatility, because there's going to be some backfill into some of these gains once the new year starts, because of where valuations are, and I think there's going to be some evening out until people are clear as to what's going to happen with rates and potential infrastructure, those kinds of things. That could add another impetus to it. So we'll keep an eye on all those, and as always, steer you in the right direction with the right indicators. So, Happy New Year, trade well.